Many thanks for staying tuned. It's still the conversation on Lagos Television. Today we're staying with the economy. And today we're taking a look at leveraging on AFTA, and that is the African Continental Free Trade Area. And of course, looking at how we can leverage on that for economic development. And we do have in the studio with us a friend of the house. And together, Ajibola and I will take him through this conversation this morning. Join us today as we welcome Muktar Mohammed, CEO Finance with Muktar. Is also a financial management consultant. Thank you, Muktar, for being here on the program today.
My pleasure. Good morning.
Right, let's start on this note. This agreement we know came into force fully in 2021, but a lot of Nigerians still do not really understand what this is all about and how Nigeria and Nigerians would, can enjoy this. So to take us through in the simplest form, what exactly is AFTA all about?
It's all about trade between African nations.
Right.
Because what we see is that African nations do a lot of trade with other continents rather than within themselves. So the African Continental Trade Agreement was just like an agreement that would make trade between African nations seamless,
right?
In the sense of they looked into the taxes, they look into the cost of production, they look into transportation. Then they looked into other aspects, but again, the condition was that the product, whatever product you are bringing into, let me say you're bringing a product from Ghana to Nigeria, that product must be manufactured in Ghana.
Right.
So it's not a situation whereby
where
you
bring
import
it from another country,
then you're able to bring it here. But there have been these challenges because they've not really so much trade between Africa. Because Africa mostly we have raw material rather than finished product. And then a country like Nigeria, okay, why we are part of the last nation that signed that agreement. And the main reason was just because we know that cost of production of our goods are very high. We have the population, we have the market. So when you bring in some of those goods into Nigeria, that means our own production level is high. So the cost of those goods will be cheaper, while our own will be more expensive. And the whole Nigerian will patronize that. So I think that's been the challenge. The only advantage we've had of recent is the average of Dangote refinery, but they were able to send up a refined petroleum product or some of these African countries. But mostly, like I said, the challenge in Africa has been that we are more into raw material rather than finished product.
Okay, Muktar, even though this is meant to create a single market for Africa with a GDP of $3.4 trillion, since it was launched in 2021, like Abimbola said, are there visible impact of this initiative?
There are little impact here and there.
Little
impact here and there. In terms, if you look at of recent data, shows that there's been a little bit of trade within African countries. And if you look at the African GDP of 4.0% for the continent, which is even better than what you have in the global economy of 3-something%. So, but again, the challenge has been cost of production. I keep saying that has been the main challenge. Infrastructure. And when we talk about infrastructure, we're talking about transport network within African continent. Because again, it's not easy to get the daily movement of goods from one nation to another. If you want to move them through cargo, you don't see those movements daily. You have to wait. If you want to move them through direct air, it's rarely you see daily operation of flight within African nations to African nations. Daily, you rarely see that. You rather see twice in a week, thrice in a week. So all these are challenges that have really not been able to make Africa see those impacts very well. And again, like I said again, the challenge also has to do with that Africa feel more comfortable doing business with the Chinese, with the Americans, because of it help in ending the effects. So when you are doing within African nations, then what is the medium of exchange, and how do you now balance this medium of exchange? And then volume of trade also is a challenge. A lot of you continent, a lot of country, we look at the volume of trade. You realize that some will have more surplus than the other. So what definitely happened? I think that's majorly those challenges need to be addressed.
Okay. So like you mentioned earlier, it's an African thing, and it's just meant to again boost the ease of doing business on the continent. But I mean, since it came into full force in 2021, we are in 2025. Report says currently it has raised just about 20% in intra-African trade. Is that a challenge in, the uniformity that the proponent of this free trade zone had for the continent. Do you see this as work in progress or a clog in the wheel?
I think it has to be work in progress, especially now when you look at the global economy.
Okay.
You have to think of doing business within yourselves, because most of the superpower that you think, oh, where the people that want to do business are having their challenges here, tariff issues, then trading, volume of trade, trying to make a balance. So I think the odds now is on Africa to begin to see how they can trade within. They don't have an option. The issue, like I keep saying, is because Africa are more concentrated on the resources. They have the natural resources that they have. The fit to making it into a finished product has always been a major challenge.
True.
Because why some of these things are not, if now we know Ghana to have a lot of cocoa which could be brought into finished product, and even Côte d'Ivoire, even Cameroon to bring your chocolate. But when you look at the chocolate, if you buy a chocolate in the UK or you buy a chocolate in the US, it's cheaper than even buying a chocolate in Ghana, which is closer to you. So that tells you about those cost of production issues, and those has to do with charges here and there in terms of movement. So how do we balance that tariff? Should it be tariff-free?
Okay.
Should it be tax-free? Those are part of this technicality that I think the nations have not been able to address yet.
Agree. Jijibala, sorry, let me just stay with you, because I know that back then, before Nigeria signed this agreement, there was also the consideration whether or not there could be a single currency. You're smiling, whether there could also be a single currency, especially for the basis of which this agreement was designed at that point in time. I know I'm not sure you ever saw the light of day, but for you, what were some of the reasons why that didn't scale through?
It can't scale through. That's why I laugh, because again, we Africans, we like doing copy and paste. We look at what has worked in one continent. We now said, okay, can it work here? Now, the basic of a single currency must first of all be the volume of trade. So when we are doing a lot of trade within ourselves, then we are now looking for a seamless way to make that transaction. So then we begin to think of single currency. So what we saw in Africa was Africa fighting for single currency, but yet volume of trade within themselves was non-existent. Right. So when you are talking about single currency, then you have the Anglophone, you have the Francophone. Do we use the CFA or do we use the franc? So there's a lot of challenge, and again, most of those Francophone countries or Anglophone countries seems to trade with their colonial masters more than France things don't trade. So it was a big challenge, and so I for one don't think that we should begin to think about that. They should have concentrated on volume of trade first. So after that, then you can begin to talk about a single currency, because the European did it. Because again, you look at movement between Paris to UK. And you look at the hour of transport, the EU is just like a small region within themselves. They have the railway, they have flight going daily, boat cargo. They even have road networks traveling goods from point A to point B. So, but in our own case now, if you look at the superhighway, that normally we've not had those superhighway from Nigeria to Ghana. We are still even in the process of doing that, even from Lagos, even crossing to Benin. It's a big challenge with the road network, and that is still ongoing. So I think single currency for me is still going to be a mirage and a jamboree if we don't do the right thing.
Okay, so what are those major economic components that we might need to infuse for this initiative to position Africa as a major player in global economy, and as well fast-track industrialization of the continent? You've
said it, fast-tracking industrialization is all about infrastructure. So we first of all look at infrastructure, like I'm talking about the superhighway. Let's have a superhighway that can move goods from Lagos to Côte d'Ivoire, and without so much security points, levies here and there. I think that's what we should concentrate on. And then if we want to talk about the aviation, how can we have synergy? You can see, if you see the aviation bilateral trade agreement, you rarely see that agreement between Nigeria and Cameroon, or Nigeria and Benin, or Nigeria and Côte d'Ivoire, or Nigeria and Kenya, or Nigeria and Botswana. But you see those bilateral aviation agreements between Nigeria and Brazil, we'll fasten it. Nigeria and China, we want to have Nigeria and Singapore. So, but we are not looking at our neighbors to see how can we really have this trade within us? How can we improve transportation? How can we improve movement of our goods? What are the levies? Do we still have to have these security points that tend to make those costs of those production go up? And then tariff. should it still be tariff-free? And when it's tariff-free, will it be tax-free? So all these are technicalities that need to work in before you begin to say, okay, the African Continental Trade Agreement is here to start. So just like you said, industrialization first is key. After that industrialization, then the ease of doing business within yourself. So that for me is the key driver that will make this see the light of day. But if we continue with the way we are, the Chinese are coming, the Americans are coming, the EUs are coming, because they are looking for a new trade partner, especially with the kind of global shifts that we are having in trade now. They are looking for a new trade partner, and it seems that we are readily available because we seem to be the one that they can take advantage of our raw materials, finish it into finished product, and bring it back to us, and they sell it for us at an expensive price.
Okay, so under this agreement, and when we look at where we stand in Nigeria now, talking about SMEs and startups, do we have is there potential to actually develop under this agreement?
Huge potentials. Huge potentials, and I think you can see that in the ICT.
Okay.
You have some Nigerian companies that are operating in Kenya. Right. They have grown their brand. Then if you talk about the financial sector, I think that's where we've seen that huge potential. Nigerian banks are virtually in every African region. Right. If you talk about South Africa, you talk about East Africa, you talk about West Africa, you talk about Central Africa. We have our banking institution well positioned. I think those are the success stories. Okay. And most of them say they are positioning themselves for this African Continental Trade Agreement, which everybody believed that it will take a while, but it could get going. Okay. It could get going. So in terms of that, I think the advantage has been to the bigger player, the financial sector, the conglomerate. Right. Also, you see the movement of goods from cement companies, Dangote Cement, Boa Cement. Also, there are people that have been exporting and have companies also in some of these countries. Right. Then again, you see the refine of petroleum product now by the Dangote refinery, where you see a lot of African countries are now signing an agreement instead of getting those finished products from other from the Middle East. They are now beginning to see we can come down here and get it. So those are part of the success story in terms of Nigeria, right, SMEs. So SMEs, I think we've seen more in the fintech space. Right. Where because entertainment? Entertainment, fintech, because again, it's easy to have those movements. Because again, when you talk about fintech, you talk about technology, right. You talk about the cost of establishing a fintech company is not huge compared to the cost of establishing a manufacturing company in some of these places. Right. So I think that is why we are saying then entertainment, of course, because it's just get the stage, get the venue, and the people will come. So that for me also, I think if there's anything we have exported out of Africa, and now we are exporting to the world, is entertainment. Right.
Okay, Muktar, you mentioned the challenge of infrastructure the other time. How critical is power to these initiative if indeed Africa want to be a major player in global economy? We see a power challenge in Nigeria as well as some other countries of Africa. So how critical is power to this initiative?
When you talk of some other countries, when you say some other countries, you are trying to put it in good terms. Because before now, we thought one of the countries that enjoyed 24 hours power is South Africa. But you know that has changed also. They are having challenges with power also. So power is a major challenge, especially if you want to tap into the manufacturing space, the agricultural space, which seems to be African strongest brand. But unfortunately, you can't get that because, again, power is major cost, especially in the rural area. There seems to be non-existent. Over 70 to 80% of rural area in Africa do not have power. And they are supposed to be the bedrock of agricultural production to move them into the cities and then trade within ourselves. So definitely power is a major cost. And that is why the cost of production is high. Because when there's no power, then you have cost of production. And when there is power, sometimes it's very expensive. I mean, you use the Nigerian factor. Why we seems to not see the kind of hike in price for power, for goods and services for most of these major companies is because most of them have already developed independence power plant even before now. Because when power was non-existent. So now that power is existent, it's even more expensive for them. Remember, they also have to power those plants with diesel. And diesel cost also has gone up. So it's a major challenge. Power is a major challenge. And that's why you see that if you look at African Development Bank, MZM Bank, all of them are thinking of how they can power the rural area. And in Nigeria, you know about the rural electrification, even if it's more or less like a mirage embroidered with a lot of corruption. But hopefully one day we'll get those rural electrification, we'll get it right.
How key would it be for policy harmonization when it comes to the continent? Because again, when you talk about border control, when you talk about immigration, talk about customs rules and regulations, standard product certifications, what are we looking at here? It's big, and then how can the countries also ensure that all of these things are seamless? Because again, like we pointed at the beginning, you have the Anglophone countries, you have the Francophone countries, but language will definitely also be a barrier. So what are some of the things that you hope to see, going forward where the agreement currently stands?
You said something very important, immigration.
Right.
I think you heard the African richest man, Aliko Dangote, say that he need visa to virtually go to every African country.
Sure.
He said sometimes he need about 52 visas.
And then we're talking about the continent.
So you see the challenge there. Even within West Africa, sometimes when you travel to the Francophone West African country, you have challenge.
Because you don't speak their language.
You don't speak their language. Even when you give them your passport, they seem to question that, like if the agreement does not even exist. So I think immigration is the major challenge, unless we address that immigration aspect. Like you talk about the EU. Once you have an EU, there's an EU passport and there's your own state passport that you can just travel from point A to point B. You don't need visa. Visa restriction is not there. And then in terms of tariff, they have a balance of tariff, equally balance of tariff. And I keep saying it's because there's a volume of trade within them. So I think in terms of policies, Africa need to really sit down and say, okay, look, what should we give in? Okay. There should be give and take. And I think the major issue would definitely be immigration, because if I have to go to your country, I have to look for file for visa, and sometimes it will take up to a month before you get back to me. I think it's not good, because again, if you look at it, African, like I say, we have not really think of meeting within ourselves to say, okay, because of trade, okay, even if tourism. Let's see how you have tourist visa, and so you do visa on arrival. Right. If you're a tourist, if you're a businessman, we give you a business visa that makes you to come to a country as long as you want to establish business in that country. Right. That's what is done in the EU. Nigeria is trying to do that. I think Nigeria have that with South Africa, even if you say that has not fully taken off. So, but we are saying that there are pockets of those agreements going in. But again, I think we've not done enough.
Okay, so as African countries, we all know that some countries are more powerful and more blessed than one another. So how do we leverage on the strength of one another to ensure that we promote a regional value chain?
Yeah, I think that's the challenge. Regional value chain. Who is stronger? We are better together than if we are. So everybody has a strong point. I mean, you have your strong point. She has a strong point. But if you want to emphasize more on a strong point, then you also have to look at, she also has a weakness, you have a weakness. So you tend to strengthen each other's weakness and then capitalize on each other, work on each other's strength. So I think it's a major problem, because in Africa we are jack of all trade, master of none. We talk about cocoa. I don't see any reason why Nigerians should be thinking of, we should be thinking of cocoa. We want to go back to cocoa. But it's just people that are doing cocoa. Why can't we capitalize on our good agricultural output in terms of cassava? Why are we not capitalizing on that? Why are we not looking at our palm oil? That was our seed of palm oil was taken from here to Malaysia. And today Malaysia is one of the largest producer of palm oil. Why are we not going back to that? Why are we not looking at other aspects that we have? Bitumen. Why are we not looking at that? We now have refined petroleum products. Why are we not looking at supplying refined petroleum product? So you need to look at your competitive advantage, and then that's how businesses can begin to develop those volume, give and take. Those days used to be trade by barter. So what you have, you give. What you do. So we need to go back to that and begin to see that instead of making it like a competition, we know that South Africa have all the gold mines in the world. So why are we busy fighting that we also have solid minerals? Why are we not saying, okay, South Africa, you have the gold, you have the steel industry there. Can you give us steel? Can you come and help us develop Ajakuta steel? Why are we always going to the Russians, to the Chinese to come and develop our steel industry? Those are part of the things that we really need to look at as a continent. But I think it's boiled down to that inferiority complex we see within ourselves as a continent. We don't seem to be confident to do business within ourselves. We feel more confident doing business with the Europeans because it's cheap money, because they just take our raw material. We are not looking at putting it into finished product because the cost is even high. Sometimes, again, Africa don't tend to protect their own companies.
Right.
Like what you see in Asia, especially South Korea. They protect Samsung. They so protect them, giving them a lot of advantage to be a global player. But how much of our companies in Africa do we protect to make them a global player so that the benefit itself will come back to Africa? I think those are part of the things that we need to look into.
Even look at the rivalry between NNPCL and Dangote recently.
Of course, but that is a healthy rivalry. But for me, I think it's healthy because, again, those rivalry are good for
business.
For business and for the common man, because for the first time, the elephants are fighting and the grass is enjoying. Because price coming down is good for everybody.
It's good
Today,
for everybody.
you go in, they say it's 925. Tomorrow, you go in, they say it's 885.
Yeah.
So you are just like, okay, if this is the regulation, continue the fight. And more others will come. Because when more others come, then value change. You remember, before now, like talking about the telecom sector, they said, somebody said, look, we cannot do per second. It's going to take us 3 years, 4 years, 5 years before we can have per second billing. And a company came and said, we are launching production, we are bringing per second. The one that said, we're going to take 3 years, realized that, if we don't get into per second, within 2 weeks, within 2 months, before they came into per second. So that's the beauty. But again, people will talk about monopoly, that. Just a topic for another day.
Right. So let's look at what Nigeria can put in place rightly here to harness all of these opportunities. So if we take a look at Nigeria herself and how she can position herself as a powerhouse in all of these things that we've talked about, then there will be no, then these countries will have no option than to want to do business with Nigeria. So first and foremost, what are those things that as a country we need to also do fast or soon enough to make Nigeria a decisive place for other powerhouses on the continent to want to do business with?
You said it before, power. We need to.
It still boils down
to power.
To electricity.
We need electricity, then infrastructure. Infrastructure, we seem to be doing a lot now, building roads. So I think we are gradually pulling those infrastructures together.
Okay.
Then ease of doing business is key. Yeah, so we need to begin to look at ease of doing business, even within local government and states. Because if you look at Nigeria, it's a prototype of what is happening in the African continent. Because you see, you talk about Lagos, somebody has a goods, he moved from Ikeja local government to Kosovo local government. From moving from Ikeja to Kosovo, they are charging me a fee.
So double taxation.
So those are the challenges. So it doesn't give room for ease of doing business.
Okay.
We need to begin to look at ease of doing business. But I think the major one is just power and infrastructure. If we are able to, you see, if Nigerians succeed in building a good power base in terms of improving its power supply, and then have those infrastructure, Nigeria is like Nigeria and South Africa are the largest economy in Africa.
True.
Once those two are able to build this toolkit, and those two are able to trade within themselves without rivalry, it has a snowball effect into other countries. So for me, I think ease of doing business, infrastructural development, and also power is key.
Does government policies play a role
Of
here?
course, that's why I'm talking about policy. That's what I'm talking about, ease of doing business. That has to do with policies. What kind of policies are we still using? The archaic policies. Thank God for the new tax law that has come in that is more modern compared to what we have been dealing with. All this. Those are type of policy we need to continue to see Africa do within themselves.
Okay.
Oh, okay. Still talking about policies now. Some of our African policies are not consistent. When you look at the operation of a particular telecom company in Nigeria, the kind of services that they offer in Nigeria is different from what they offer in South Africa. Just like those other ones in cable business, they do per view billing, and over here is not the same. So how do we harmonize all these things together in such a way that it will be to the benefit of African economy?
It all boils down to cost. Why is it cheaper in that country than here? It's cost. Because if you look at telecom in Nigeria, let me tell you, the challenge they have is that every base station is powered by diesel. Every base station, they have to power it. There's no infrastructure. But if you compare it to the other place, they don't need to do that. So that means the cost of the will be cheaper. So even in cable, with the cable also, because even the cable, they have to power up receiving, they have to look. Power is the key problem. So that's why we're talking about, you remember Nigeria refused to sign that agreement for a long time. Because they realized that if they sign that agreement, if they don't put their house in order, they become the dumping ground. All other African products will come here and they will have patronage. But Nigerian product will go to those countries, they will not have patronage. Even within Nigeria, then the Nigerian product will also be suffering to get patronage from Nigeria, because you see a cheaper good. Why would you go for that? So I think it's all boiled down to cost of production. So we need to look at a way of bringing down cost of production. That's why I'm somehow excited with the new tax law. Because again, if you see company income tax coming down from 30% to 25%, that means you have reduced cost of production by 5%. That also could be a game changer. So any little adjustment here and there could also be a game changer, so that you can be able to compete globally. So I think for me, that's the main challenge.
Right. Let's also, because we've talked about poor policies and how government can also improve on these policies. We understand that at the moment there is low awareness and capacity among SMEs who do not even have an idea of how to access the aftermarket or benefit from reduced tariffs. How do they go about it, or who is responsible at ensuring that it holds them by their hands and they're able to navigate the murky waters and make good use of this agreement?
I think they have a body. I think the African Continental Trade Agreement has a secretariat that is supposed to be doing that. But again, like I said, they've not really kicked up. A lot of countries are still holding back because of some of these things that we've explained about. I think they need to be aware, education, giving them more education, and also helping them to make sure that they settle down. Because every businessman wants to sell his product. Sure. But when I know that it will be a challenge, so why do I even start? So they need, I think, more or less about enlightenment, because it seems to be that the African Continental Trade Agreement enlightenment comes from the media mostly, but we have not seen that engagement between those the agency involved with the businessmen, to let them see what is there for them if they have to do businesses using the African Continental Trade Agreement. I think for me that is the major challenge, until they begin to see value in what they want to do, and also begin to look at value chain. So you don't have to, I don't have to do everything. I also could look at the value chain end of how can I capitalize on this. All this can only happen when there is a forum and they are educated. Because if up till now you see that a lot of even African SMEs do more business with Chinese than even within African countries. So they even seek more business partner with European, with the Chinese, with the American, than they seek business partner within Africa. And you can't blame. There's a particular payment company in Nigeria that opened its branch in Kenya. It became so toxic for them in terms of challenges they have with the regulators there in China, in Kenya and everything. They have to, they were fine, and they were thinking of, like, at the point they want to leave Kenya, because again, it becomes a rivalry. Like, they want to protect their own indigenous company. They are not looking at the larger picture that is creating value for Africa. So I think those are basically the challenge that we have.
Okay, so in also driving this African Continental Trade Agreement, how much of investment do you think we should put into ICT, knowing full well that the world is a global village today? And like you rightly cited the other time, some of our rural areas are still in darkness as we speak, and the level of internet penetration in some African countries is still not there. So how vital is investment in ICT to this trade agreement? Very
vital. And again, outside of Kenya, they have a little bit of penetration in terms of internet connectivity for mostly for financial transaction. Most African countries are struggling. We can also say that of Nigeria of these days, since we introduced these fintech companies also. They've helped in terms of doing those penetration in the rural area. So I think we still have a lot to do. And again, like I said, the cost of doing this also is a major challenge to some of these ICT companies. If they want to establish, you realize that majority of the ICT companies in Africa wants to be in the heart of the city rather than going to the rural area. Because again, for you to begin to do that, then we need to begin to think of modern way tax incentive, telling you that, okay, if you open a branch in the rural area, you get tax incentive. If you want to develop the rural area because of what they can add to the continent or to the nation's economy, then you begin to see a lot of them will begin to do afterwards, especially with when you look at Nigeria with the new current tax law. So they will begin to look at ways whereby they can also have tax holiday. So government can begin to look at it as, okay, if you invest in the rural area, we give you a tax of holiday, because the rural areas are the live wire of the Nigerian economy, in the agricultural sector. And they could also transit into exporting some of this non-oil product, and that will bring revenue to us. So I think we need to begin to look at that, how we can give tax holiday, encourage them to go to this rural area. And then security is key. Because when you talk about infrastructure, you talk about telecom infrastructure, remember how this infrastructure have been damaged in the northeast, north central because of the advent of terrorists. They see those infrastructure as a means for government to know what they are doing, how to get to them, the terrorists and the bandits. So also we need to improve security.
Right. So before we wrap up this conversation this morning, you did say when we started that it is work in progress. And of course, if we look at the number of years, it's just about 3 or 4 years, that this agreement really came into being. So if we, just taking a leap into what you expect, maybe in another 5 years, you've mentioned weak infrastructure, you've mentioned also what is it called? Policies. We also talked about, issues around immigration and customs as some of the things that, Nigeria also needs to strengthen. But peradventure, what else do you hope to see as the movement continues and we look at, the issues surrounding this free trade zone, it being more embraced on the continent?
I think we have to look at human capital development.
Okay.
Because what we've seen in Africa is we talk about our resources, we talk about all that we have. We don't look at the human capital, which seems to be one of the richest skills that we have in terms of skill development. We need to begin to look at the human capital. In terms of human capital, we look at our strengths and then begin to develop those strengths. You see, Africa comes up with policy, but it moves even the states, even the federal government. If you look at Nigeria, if you look at the continent as a whole, they don't seem to have a place for human capital development, which is where we'll talk about social investment, we'll talk about education. We need to begin to look at those. I think for me, that's what, once you are able to develop the human capital, then they will be able to take advantage of whatever. Because if you go up with this African Continental Trade Agreement, you don't develop your human capital. What you see is that the foreigners will come there and establish these companies there and also bring in their own expertise. So Africans are not really going to benefit from it. So we need to begin to, if there's anything I want to see in the next 5 years that will help us take advantage outside of those other challenges, is to see the development of human capital.
Right. And from what you've said, it means that once human capital is development, we can also begin to export our expertise in some of these things.
Exactly. I like giving an example. India have one of the biggest and robust external reserve in the world, over 860 something billion in terms of reserve. But again, those reserves are largely driven by intellectual export into India. Most of the Indians, wherever they work, they tell you that you pay their money in dollars to their own economy there. So those are part of what we should begin to see, because again, if you look at a country like Brazil also, you look at their human capital in terms of their value in terms of sport, and most of their clubs and those that they earn FX also, and they also help to stabilize the economy. That's why it was like a magic with the way Brazil and Argentina economy were able to stabilize, especially in the area of FX. They look at the human capital itself and look at what they can export globally. I think that's what we should also be doing, so that we can build a robust reserve.
Jibala, do you have any more questions?
All right, just one more before we let you go. When it comes to tourism, Africa is equally blessed. And can we drive tourism development through this agreement as well? And are we doing enough to project Africa on the global map?
In terms of tourism, I think even the Europeans tend to come to Africa than me and Jibola going to any African nation.
Visa issues are always the problem.
Exactly.
As well.
So that's it. because you want to go to some of these continents. I mean, the kind of visa restriction of recently, there's a particular country that Nigerians used to go to. They are now restricting us. They say no more visa on arrival. And so those are the challenges. I think migration is key. Because again, like I said, it's almost like a mentality problem. An African likes the Europeans or the Chinese or the Americans. They can easily get access to come to their country and show their passport, and they allow them to enter, than you and I. And again, because of that, again, you and I feel that it's easier for you to go to tourist area in Greece, in the United States, in the United Kingdom, than even thinking of going to somewhere like Seychelles and others. And again, you also, we talked about it, aviation costs, in terms of aviation infrastructure. It could take you up to 2 days to get to Seychelles because of the connectivity in terms of aviation connectivity, airline connectivity. But you want to go to all these countries, it takes you less than a day, and you have those connectivity. So that's the challenge.
All right, I guess the proponents of this agreement will still need to sit and look at the workability of this. So it's also not a way to keep the continent further divided, as against rather uniting the continent. We'd have to leave this conversation here this morning. Thank you so much, Muktar Mohammed, for finding time to be with us on the program.
My pleasure.
Jibola was nice to you anyway.
Definitely, very nice today. Very nice today. He wasn't giving me jam questions.
We'll have to take a break. When we return, Adibimpe and Joy will be here with the Lagos conversation.